the lineup of speakers and everybody speaking today. And again, good afternoon and welcome to the webinar again. We'll be having, such a great conversation today because before now, I had gone to your profiles and I've seen the amazing work you're doing, and I'm so proud to, not only be moderating but listening to all of you today. I hope we're all doing okay. Please just let me know you can hear me, and just tell us how you're faring today or anything. Okay, perfect. Thank you. Please, if you can hear me, just a thumbs up, a hello, anything at all. Yeah.
I can hear you.
Okay, thank you so much. Please, if you can hear me, just I just want to be sure we're okay.
Absolutely.
Okay.
Yes, we can hear
Thank you
you.
so much. All right. Welcome everyone once again. And it's 2 minutes past 2 o'clock, and this conversation is supposed to be within 45 to 60 minutes. We're not going to extend it more than that. So we just keep the conversation within 45 and 60 minutes, if that's okay. And the conversation today will be centered around catalyzing capital, government funds as venture enablers. And being that, every one of you is such, a great leader, an amazing thought leader, we just thought, this conversation best describe the work you do and who you are. So thank you so much for being here once again. Yes, thank you. And we will be jumping into the conversation real quickly, but for people who are watching us right now, our audience and people who are joining in, I will just be introducing our speakers for today, and so we'll know who is speaking to us and who we are speaking to. And today we are joined by Mr. Philip Gondi, who is a Senior Innovation Officer, Kenya National Innovation Agency. Welcome, Mr. Philip. It's very nice to have you here with us, and it's very nice to have you speak with us here today. Thank you so much for being here. And we have Ela Burston, who is also Vice President Venture Capital at BDC Capital. Welcome. It's very nice to have you, Ela. And of course, we have Finyi Ogunleshi. I hope I got that correctly, who is also a managing partner at Brigglestone Capital. Thank you so much for being here with us. Welcome. It's such an honor to have each and every one of you here today. Please let us know, how you feel about the conversation today, and just, something about you that I haven't maybe talked about. Let's start with you, Ela.
Well, thank you, and it's a pleasure to be here. It is morning for me, a beautiful morning here in Montreal. So happy to start with an introduction about BDC, if that's what you're hoping for.
Yeah, just anything that I haven't said and our audience maybe needs to know.
Yeah, so BDC is the Business Development Bank of Canada, and we are a Crown Corporation. And so we are in the market to serve the needs of the small and medium-sized businesses across banking, as well as 10% of our capital is specifically for venture.
Thank you so much. That was very concise. Thank you so much. Over to you, Ping. Please let us know something I haven't said and our audience needs to know.
Okay. Of course, I'm excited to be here. I hope you can hear me well.
Yes, I can.
Okay, awesome. I'll introduce Brigglestone Capital as well. We just kicked off about a month ago, and we are an investment vehicle designed for the Africa continent, basically, investing in creative industries, sector agnostic across board, looking for early stage companies that are in the space, solving for the space. You have strong IP, you have pathway to monetization. You're passionate, right? Africans are passionate, so yes.
Yes.
we're looking for this
Thank
kind of
you so much.
opportunity. Yeah.
Okay. Thank you so much. Thank you so much. And now, Mr. Philip, please would like to hear, something about what you do, your company, and something I haven't said, so our audience gets to, meet you better. Okay, Mr. Philip, I think your mic needs fixing. I can't hear you. Is it just me? Okay. Yes, I can hear you. I can hear you. Yeah. Yeah. Okay, maybe Mr. Philip, I think maybe you need to enable your mic because I don't think we can hear you.
Okay, is it better now?
Yes, absolutely. It's better now. Thank you so much.
Okay, super. So, uh, my name is Philip Bondi, work for the Kenya National Innovation Agency. So, as an agency, our commandate is to ideally to strengthen the innovation ecosystem within the country. And so we were formed under the Act of Parliament that was in 2013. Much of our operations begun boldly in the past 5 years. So that's when the government got much of intention into coming into the innovation ecosystem, and how then do we support the innovation, just strengthen and build that. So the department that I work with works largely with startups. We also have another department then that works with research outputs. We call it commercialization. So what we work closely there is with institutions of higher learning. So then how then do we build the ideation bit of it, then we get to prototyping, then from the ideation we go to market validation, prototyping, and then venture building. So that is the kind of projects that we do at that particular department. And this other department, that the startup department, then we come, then how do we then have nurture the startups that are already in the market that are not essentially based in the institutions of higher learning or based in the research institutions. So that's the area that we then come out strongly, and then also work strongly with the enterprise support organizations. In other countries they call them the BDS. In Kenya we call them the enterprise support organizations. So that's the element that I work strongly with, and then how do we build the ecosystem in Kenya. Thank
Thank you so much. Thank you so much for sharing that with us. Thank you so much. And I mean, it's very lovely that, all of our speakers today are very wonderful people who are not just, giving us the talk, but really walking the talk. Thank you so much. And for people who might just be joining us, today we're talking about catalyzing capital, government funds as venture enablers. And Faye, you spoke about, your company and on what you're doing, and the starting up and all. And so, just for the benefit of people who are just joining us, I'd like to ask you, when we talk about government funds enabling ventures, what exactly do we mean, and why is this conversation critical for Africa right now?
Okay. I liked for this question. I think it makes sense to just use case studies, right?
Yes.
Government funding, because again, I don't see it as charity. I think it's catalytic capital that can be quite useful for the for the private side of things. I think the first example that comes to mind is Yozma fund out of Israel back in 1993 when they kicked off and end Israel $100 million fund, if I recall, and just served as a private capital. Uh, what's the word, catalyst for the ecosystem. Another one, I think why that's a key example to use is the fact that there's really a smart blended finance model that also gave exit incentives to the private capital provider. And so what that means is the government co-invest with you, and then you as a private VC or PE, you are able to exit or buy the government out at some point. You're also able to give the government money. So very useful model, and you can just imagine having that kind of model across Africa in different countries. There's also the Startup Shield uh, fund, right? That are also more like grant focused, but also key. catalytic for their economy as well. And there's also the US SBIR fund. Very useful to what we see, very instrumental, not useful, very instrumental to how we see the Silicon Valley today. Very solid in providing R&D, providing the capital that is needed. It's still growing the US ecosystem today. So I would say very needed. There's no doubt around it. Government funding is instrumental. Public capital is not charity. If you think about the funding gap on the continent alone, I think it's about $330 billion dollars per year that needs to be funded. So government needs to sort of help. Whether it's two different unique models that spur confidence, pushes local capital, national capital to support. So yes, there's a funding gap there. We as Africans are entrepreneurial. There are a lot of MSMEs, SMEs that needs to be funded, and capital access to capital is critical. So yes, I think that's
Thank
how
you so much.
important it is. We need to do it.
Yes. Thank you so much. That was a very profound, take on that particular topic. Thank you so much. And please, Miss Ila, I'd like to ask you. So, for someone, say a new startup, for someone who is just getting into the business, or just wants to, begin their company startup, or anything of that sort, what is something about utilizing government funding that they need to know as newbies, in capitalizing government funds?
So thank you for that question. I think that if I were to follow on what Fee was saying, the importance of having the government capital work with the private sector is really critical to the successful outcome of having government funds or government capital in your company. What you want is capital that is aligned going forward, but government capital has a tendency to be a little bit more patient and a little bit more appreciative of the long horizon that sometimes these businesses have in front of them. And I think that the collaboration and understanding when you have co-investment between the private sector and the government capital, particularly when it's incentivized capital, so that perhaps the government capital is taking a subordinated position to the private sector capital, then you have a strong alignment for both patience and continued commitment to the company. It's very important for anyone who's seeking capital to understand who they're getting the capital from and what the expectations of that capital is. What are the time horizons? Are they consistent across your co-investors? Because if you have little bit of disparities today, when the checks are written, those only grow into greater disparities and misalignment as time goes on. And we know time is an important feature. I also wanted to just mention, and I was, as you said, very concise when I explained what BDC does, but my role within BDC is to manage the government capital programs that we have. And as Fee mentioned, there's SBIR in the US and there was YASMA in 1993. And the Canadian government actually built out on that. And we are now 12, 13, 14 years into a series of 3 programs with over $1 billion committed to the venture capital industry. And because it takes so long to actually show data, we are just now able to report on the results of these efforts of public commitment to the venture capital asset class. And we have not yet published them, but they're going to be available shortly. But I can say that government's support in this type of magnitude over a period of time has really helped the robustness of the venture capital asset class and minimize sort of the peak and valleys that we see in this business. So I'm happy to share some of that information as we move forward. But I'd like the Canadian program to be seen as a really strong model for other governments because we're now showing that it works, and it actually works better for the private sector when the government takes a subordinated position. I'm happy to go on, but I think I answered Mimi's question. We don't hear you.
Okay, yeah, possibly Ella. Oh, you said, is it Ala or Ella? Okay,
It's
I think
actually Ela, like Sheila, but
Ella.
no. Yes.
Oh, like Sheila. Okay, fine. Perhaps. Okay, fine. I like I I like your presentation about what government is doing in Canada, because um, I'm so much impressed with that. Yeah, you know. So I'm looking at it when the government gives that money to the VCs, like you. Is there a bit of interest that is given to it? What's the payback period? Then that could how that will work into it. The foundation of asking the question is because as a Kenyan government, we're exploring the need of having a funding program for the startup. So perhaps
Yes.
I believe I would like to understand that model to some bit, if time allows, or if something that you can just give me a hindsight of how that works. Thank you.
I can give you the very abbreviated version, and happy to communicate with you, offline, and it's certainly not a secret. So we do it in two ways. We do it through fund of funds or through funds. We do not invest directly in companies. The investment is there's been a variety of different patterns to the capital call. So we have an asymmetry in some of the programs, or we have pari passu. The government can take the same pref return or a smaller pref return, but the economic features of the investments are typically driven by the private sector. The government focuses on what the distributions look like, and in the case of the programs I run, there's an asymmetry of the distribution. So the private sector actually gets their capital back first in the funds of funds model. They get their capital back with a pref return, and then the government gets their money back. So it really protects the downside when you're allocating capital to this model as a private sector investor. And the asymmetry of the waterfall is something the Canadian VC stakeholders now understand, but it took some time to explain. When the government invests directly in funds, as opposed to the fund-to-fund model, there is no asymmetry, but we require a matching proportion so that there really is a private sector driver or private sector champion that will help the fund manager determine all of the terms and conditions and economics of the scope of their fund. So it's really an interesting collaboration, and happy to share more information with you.
Thank you so much for holding it down while my network glitched earlier. Sorry about that. So I'd like to ask Mr. Philip this. How do we make sure government capital doesn't just flow to the usual suspects but reaches understaffed founders and geographies? Should I take that again?
Yeah, sure, please do.
Okay. So the question is, how do we make sure government capital doesn't just flow to the usual suspects, but reaches underserved founders and geographies?
Okay, yeah. Thank you so much, Mimi, for that particular question. So, in terms of how then we get this to, you see, what we do internally, in term when we have different course of application of different programs that we do, we look at it in terms of geographical balance, so that in a way that we do not anticipate, so the system is planned in a way that we do not have people from the same particular geographical region, because that's our architecture here is in terms because you also understand as in African setup, we more clustered in regards to tribes, and then this will be in different particular geographical regions, and that becomes a political segment to it, and then that informs why then geographical uh, spread makes sense. So secondly is for during application process, then you get your application using your identification cards, and then that also becomes a unique identifying, then that limits one from coming repeats, getting repeat persons coming through the program. So those are the two facets in how we look at it internally here.
Thank you so much. Thank you
Thank
so
you.
much for that answer. Thank you so much. That was so timely and very profound. Thank you so much. Fee, please would like to ask you this because we think that you are the startup OG and you understand how this works from grassroots to the top. And I hope that we are not saying the wrong thing because I mean we're seeing your portfolio and we know that you are the startup OG. And the question is, what role should public funds play in early stage ecosystems where private capital is still hesitant? Should I take
Okay,
that
yeah,
again?
sure. So yeah, you can come
Oh,
back.
yeah. Okay. So the
Mike.
question is for Fee. Fee, can you hear me, please?
Oh, hey.
Yes. Oh, it
Okay.
sounded like Philip. I was
Oh,
sure,
yeah.
yeah.
Actually, they sound the same. True. Okay.
So what role should public funds, public capital, government play? Right? Is that the question? Can you hear me?
Yes. Please repeat that
Yeah.
again, please.
Is the question what role public funds should play?
Yes. Let me repeat the question. What role should public funds play in early stage ecosystem where private capital is still hesitant?
Okay. Um,
Yes.
because private capital is hesitant, right? I always say that public funds should just de-risk, um, because in this part of the world, that's Africa, right? Just given all of the different nuances, whether it's political, whether it's economic, just the context of the market, some of the perceived risk that is seen with looking at it as a frontier market. It's important that the public funds just serve as catalysts. They just help the risk. So they use different best fits, given the context and cultural differences of or uniqueness of your country, figure out the best fit model that works. So you find that for some countries on the continent, for some markets, so you find that SWIFT plus capital strategy that works, right? And that means that this is of course help homegrown capital to evolve. Right? So basically, the government is saying that we take the first cost for any private investments. That might be useful in your market. The fund of fund structure, it might be equity grants, equity free grants. It's figuring out the best way, um, best blended way. So I always say it's a blended finance model that will work, but it needs to ensure that the downside is protected in the best way possible. That ensures that capital is preserved, um, and it still brings confidence to the market, because as much as we can say that capital is not just money, sometimes is the belief, is how we see the market, is how we think about the context of um, making money there, retrieving money. So government coming in is really to the risk and help innovation. Once you do risk, give confidence to local capital providers, give confidence to foreign capital providers, you start to see the ecosystem, entrepreneurs, the entire ecosystem, that value chain start to grow.
Thank you so much. Faye, please, if you can, is there a way you can just move a little bit to ensure that I think your network is a little glitchy. There's a way you can just maybe move a little bit. But thank you so much for that very beautiful comment on that
Okay, I'll
question. Thank
try
you.
so.
Okay. All right. And we will be asking, Ila, I think that you have had, a good interaction with with Africa and African people and African markets and startup. I want to believe that, you have created some sort of bond with with us to to get on this question for us. Then the question is, what are the most promising models of government-led funding that have worked in Africa or other emerging markets? Now, this question is for you because, I believe you have interacted with us and what we do and our markets, and we want to get your take, as someone who have interacted with the markets and, maybe you've observed, a while to answer this. So please, the question is for you.
So thank you. And I've only started my interaction. I had the privilege of being in Nairobi a couple of years ago, and it was an extraordinary experience, and had a chance to hear from a number of your entrepreneurs who are really committed to bringing a significant change through to the technology opportunities that are presented. And what we found fascinating is that we are on the other side of the world, but there really are some very significant overlaps in how the entrepreneurs, some of the challenges that they face, and the challenges they face not only in the development of their innovation, but in accessing capital. And we've only started, as I said, to really divulge what we have done in Canada that we now know is having a positive impact. And we are very open about this and happy to share. And I think the commitment that I've seen from some of the government representatives during my week in Nairobi is that there is a desire to have a long-term impact, that it isn't about just, as Dean said, a charity. It's not a charity. It's about a partnership. It's about a collaboration. It's about doing this together to make the ecosystem stronger for the long term. And I think that just having that attitude and willingness is already a very big step. If the government is prepared to step up with the capital, we always have some strings attached, and I think to expect zero strings attached is a little naive. I mean, anytime you take capital from anyone, there's an expectation and possibly a constraint. So government's not going to be any different than that. But what is really important is to let the entrepreneur in the private sector determine the best on some of the economic issues. And so again, what we've tried to do, and we've had to make some adjustments in the Canadian market, is how do we ensure that our capital is being used with the greatest impact, and also bringing something back to the government. So even if it's a subordinated position, we have had these 3 programs run over different governments. And the reason we have support from the different parties is because they don't see this as a grant or as a cost. It is an investment, and it will return capital, even though it may return it at a slower rate than it should do in the private sector. So I think the African community, from what I've seen, is prepared to embark on that type of partnership.
Thank you so much. Thank you so much. And there's something you said and Fee said as well that I think it's correlating between your statement, and that is, you both said that it is not charity for us to get government funding. It is not charity, it is partnership. And I think that is such a very profound statement, and I think any startup should know this, that it's not charity, it is investment that will, bring returns. Thank you so much. And so, because Ila and Fee have agreed that it's not charity, I want to hear what you think about collaboration, Mr. Philip. Just let us know what you think about collaboration, and then we will ask you more questions from there. But they said that it is not charity, it's investment. I want to know what you think about funding.
Seeing Finn also coming strongly. In now the stages of the startups and how they've been able to support it. I'm looking at it from a perspective from the government bit of it. We notice sometimes one thing that government also grapple with is you find that the entrepreneurial ecosystem grows way faster than what government is also planning, and the thoughts and the minds of government, because government is always trailing. That's quite common even within Africa. That the people always make fast move. Now with that is where we get the paralysis bit, because if when the ecosystem moves that fast, you
It looks like Mr. Philip is having a glitch, I think.
Well, Mimi, if you don't mind, right, I just wanted to mention Ila was speaking, right? I just recall that there are a few African models that work today. There's the Ghana one, where it's the fund of funds, right? The fund of fund model that invests in, I think they've done about 14 funds today, about 77 or 70 plus investing companies, which is useful. There's the Rwanda fund, I think it's $100 million fund as well, offering first loss protection. Philip, I was just trying to fill in the time. Um,
Yes.
there's also
But go on, and
Nigeria.
then he can come up. Yeah, just
There's
finish, and
also
then he can
Nigeria,
continue.
right? This is Nigeria's infra credits, which I really like because I used to be on the pension side. And infra credits really just gave great credit guarantees to companies, infrastructure companies. So energy, water, whatever it is, right? Infrastructure. Provided credit guarantees to those companies, which unlocked pension funding. There's also in Nigeria, there's the Nollywood fund from BOI. There's now the new 200 million fund that was launched for the creative economy. So there are different models that are on the continent today and that are working well. And so again, it's just to scale. Capital is deficit in different forms, right? So it's just to figure out best way to
Best
scale.
way. Thank you so much. Thank you so much. And then moving back to you, Mr. Philip, I think you had a little bit of a glitch, but I mean we're here now, and I'll go on asking you the next question, and it is, what kind of partnerships between public institutions and private sector players can unlock better outcomes? Did you get that?
yeah, sure. I did. Oh, you say when you say Philip and Finn, I think I get lost. Sorry, I get lost of the. Okay, so given okay, maybe I'll give it from point of the case study we currently doing.
Okay.
Uh, yeah, within Kenya, it's in terms of, as I mentioned earlier. Yeah, I think you are not in, and I think that's an area I was saying earlier that I'll maybe perhaps wish to pick this up with her in terms of, because currently we're working towards a funding program within the country where we want to see how then do we partner with the different VCs or the angel investors in a model that, because you see within our ecosystem, anything that comes from government should be grants. If it is not a grant, then the private sector will come out strongly in terms of, we government can't do business. So it's not the work of government to do
Right.
business to generate profit. So the government is placed to serve. So if any levy the government it needs to pick from you is for service. It's an administrative cost and not a cost that goes into profit making.
So
That's
what
saying
if
that.
it was just about returning of capital as opposed to a profit? Would there still be that pushback from the private sector?
Yeah, and that's why you see, I mentioned to you, I'm quite interested and so eager because there's a funding that we are waiting for government as an institution, and it should be a revolving fund. So being a revolving fund is a fund that will only come for 3 years. So it means we need to get a sustainability model to it. Yes, we get also there's a bit of it that will then be coming in terms of grants, and that should come from the early stage startups. So this is someone perhaps just doing prototyping. Then how do you then get them to a bit of uh, uh, market validation? Or okay, someone doing market validation, how do you get prototyping, and then how do they then start to venture building? And that's how we are looking at it. Is as a government will then handhold the startups at the nascent stages. Once they get their footing, then we get it now to the private sector. So our aim is to de-risk the startups.
Yes.
The aspect that we're looking at is sustainability model to that.
Yes.
So that because the exchequer will not be the other competing interests within government and also needs of the people. That and then you also notice that the startups becomes it's a niche market, but it's also capital intensive. It's not MSME per se, where you go get your products put on the shelves and you can dispose
Yeah.
it
No, of course.
at that particular bit. Yeah, sure. So we're
So
looking at it the balance. Okay, sure. How?
what's interesting is because we have the equally sensitive issue of pushing out the private sector. We shouldn't be competing with the private sector. So it's a very similar sentiment from the market. And the intent of the programs are to crowd in capital from the private sector, but not replace it. So I think there is a strong similarity with your goals, if I understand you correctly.
Yeah, sure.
Thank you. Yeah. Thank you so much, Mr. Philip and Ila. Not Fee now. Fee, do you want to say something as regarding that? You know what Ila and Mr. Philip have said. You want to add to that conversation?
I think that each country just giving the for early stage, yes, there will be different models that will work for the target market. I think that as much as we like to think, there's also because we're Africans, right? There's a cultural context to everything, right? What will work? Maybe grants will work in the Kenya ecosystem. It might not work in the Nigeria ecosystem or South Africa ecosystem. I guess it's figuring out how best to incentivize the private sector uh, to bring in money or to follow on government funding. It's just figuring out how best, and it again it comes from collaborating, having these conversations, bringing stakeholders to the table to figure out the best way. Because again, incentives are important. Government needs to be able to see that they're actually making an impact.
Thank you. Thank you so much for adding to that conversation. And I just want to ask, something outside, what I have here. And it's really for everyone here, to all our speakers. What is something about startup and, assessing government funding that you know now that you wish you had known like 5 years before now? Yes. Let's start with you, Fee.
Um, I'll
That's
say
a very
how
reflective
patient,
gaze.
yeah, I'll say how patient it needs to be, just because of the just because of how the market is, right? So we've seen different again pre-COVID, COVID, and post-COVID. We've seen different circles, right, evolve, and I'll say it needs to be a bit more patient. Like we need to see a bit more involvement, especially in the underrepresented sectors. right? So I would say before we would have just all focused on which is again aggressive, maybe not aggressive, just capitalism. That's when that hurts, right? Which sectors are making the most sense, and how can we scale, right? For long term, there are some underrepresented sectors that will help the entire ecosystem altogether, whether it's health, education, and they need that patient capital. So I would say, just coming into the private investing side, I would say that would have been the key thing, how patient it needs to be, how patient it
Thank
needs to
you.
be.
All right, thank you. And you, Ila, what is something you know now that you wish you had known 5 years ago?
Well, I have to say there are not a lot of surprises. I do think it is complicated to take capital or have a government propose a program that has certain goals and objectives. At the end of the day, it is patient capital, and it is capital that needs to be well understood. What are the expectations for the capital, and don't deviate from that, because that's not ever a good thing. But the biggest risk is whether the capital is going to be there the next time you need it. So the drive towards financial sustainability is, as both my colleagues on the panel have mentioned, it is critical. So you want to accelerate that process, and more capital does certainly help drive towards that outcome, but it has to be used as efficiently as possible.
Thank you. And finally, Mr. Philip, what is something you know now that you wish you had known about, capitalizing government funding, startups, and really just the business in general that you wish you know now, something that you know? Mr. Philip, can you hear me?
Yeah, thank you, Mimi. Perhaps I'll just perhaps strengthen what. Am I audible?
Yeah,
I
but yeah,
think
just
not
yes.
audible still.
Please go ahead. Yes.
Oh, fine. Sure. One aspect of it is in terms of sustainability. Before before joining, I always thought that okay, government money looks like a grant. Until you get in, then you notice even the government itself is struggling with sustainability models of that particular way, that the government does not enjoy giving grants. It wishes it had a way to make it sustainable at all. Fine, it's governments are there. It's a social contract. That's how governments are elected. It's a social contract with the people, which means after a specific duration of time, then the people will be asking the same government, what did you do? And that's why government sometimes goes to granting, though it does not enjoy it at all. Should it find a specific sustainable model, then government will always want sustainability, and government always do not want to run the funds. They always prefer being run by other people they support. So government is never good at running funds. They're good at facilitating funding. Thank you.
Thank you so much. Thank you very much. That's a very nice answer. Thank you so much. Fee, are you there? Okay, I think Fee needs a moment, and okay, she's here. Welcome back.
Yes, I
So yes, we spoke about startups. We spoke about funding. We spoke about the creative economy and how it differs from different region. And Fee, you spoke about how it's sometimes different when you're in Kenya. And how it may be different the reforms in other parts of Africa. And I just want to know, what is one bold reform or innovation you recommend to make public capital work better for startups in Africa?
I wish I had the crystal ball, right?
Yeah.
Or because I wish I really had. But today, because again, I am focused. I found the vehicle is focused on one of the underrepresented sectors. That's the creative industry. One of it's creatives, there's infrastructure. One of those sectors, right? Um, I would say it would really be good to see like a first loss model first loss protection model that helps to first attract local capital, and then we can follow on foreign capital, and then it helps to protect the capital providers. So you find that for sectors that have high perceived risk, like the creative space, people don't want to put in money. To be good to see that there's a model from that is government backed that says, "Oh, we'll take the first loss, we'll protect you, go in, we're right behind you, whatever for the period, right?" So it would be good to see. It would be good to see that. I think that would really be catalytic for the ecosystem.
Okay, thank you so much. And I really hope that people invest, because I mean the creative industry is fast booming, and that is, a place, yeah, is a place for people to really look at.
Yes, it is. The key
Yes,
thing is opportunity to de-risk, and because again, the creative economy, the creative ecosystem is really exportable, right? You can grow, we can all grow our FX, grow our reserves. We can go global much easier than if we had. If we're carrying, I guess, tangible products, right? Some of them are really intangible, and they move as
yes,
fast. It's
yes,
good to see a lot of support.
yes, yes, I think so. Mr. Philip, you want to say something else regarding that? Because when she was speaking, you look like you need to say something about the creative economy and how much of an investment it needs. Do you want to say something regarding that?
Yeah, sure. Sure. Okay, creative economy looks for government. It's a buzzword, to be genuine. It's a buzzword because it ain't tangible, and you see how it looks at it. Number two is the risks are relatively so high, same as the returns will be extremely high, and that's why you'll notice even from government perspectives, they would want to facilitate enabling environment for it rather than putting in actual funds to it directly because it looks liquid, though there's some bits, and that I'll put to much of it because at the initial bits, because you understand, at the initial bits, startups always fall in love with the idea rather than falling in love with the problem. So, and that's something that we battle with so much in support of startups because creatives, much of them, when sometimes one gets in a toxic, sort of say this, a toxic relationship, you do not understand the problem, but you're more into the relationship rather than into the purpose, into a person rather than the purpose. So with that, I always look, even personally, even here we share, we really shy so much from the creative economy, apart from looking at the bits of patenting and copywriting. That's the area in which government will come more strongly to support that.
Okay. Thank you so much. Thank you. And when you said most times people fall in love with the idea of it and not the actual work, that stuck. I was like, oh my god, because that is very correct. That is very true. Most times it's the idea of it, that thrills us, and really not the actualization of it. And yeah, when you said that stuff. Thank you so much. And Ela, please, I would like you to answer this. And it is, what's one government initiative, past or present, you believe deserves more attention or scaling? Ela, I think your mic is off.
Yeah,
Oh yeah,
so
you're back
I'm
now.
certainly biased here. I do think that
Okay.
the programs that we have do need to be more visible to other governments so that it can be used sort of as a foundation of learnings that we have already put into place. Because it's been 3 programs, each of 350 million, 450 million, and another 450 million. And I think that understanding what works and what doesn't work over 3 programs and nearly 15 years is a wealth of information that others can learn from and adjust. And we are Canadian, so we don't have a lot of big fanfare, and we're not out there, with fireworks and bells and whistles. So I say that with a certain amount of humility, that this program really is something to learn from. And the analysis that we've conducted was conducted by independent third parties, because we really wanted to understand what works and what doesn't work. And while we may not have a roadmap as to how to continuously improve it, I do think collaborating with other governments who are facing similar challenges, of perhaps a adolescent or immature ecosystem in venture could really, we could work together and learn from one another.
Yes, thank you so much. And then you said that you may not be out there, but you're open to learn, and the progress is in the learning, I think. And I I just I just feel like this question also should be for you, Ila, and it is, if we get this right, public capital catalyzing innovation, what could be the future of entrepreneurship? What would it look
So,
like?
yeah, I think that's such a good question. I mean, we know there's data that shows countries grow when their companies can grow. And I
Mm,
think that the entrepreneur and the startup ecosystem, it was what drives and fuels the growth of larger companies. And it's the genesis, it's the fuel for not just, employment and um, economic sovereignty and sustainability, but also ultimately it will translate into the GDP, right, of each geography. And so putting the right tools and resources into that just is the start of your capital food chain.
thank you so much. Thank you so much. And we are almost coming to the end of this conversation. I did not even notice, because we're having such a great time, and I'm learning so much. I almost forgot that we need to we need to wrap this up. Thank you so much, our speakers, for sharing your experiences, your journey, and your insight. Thank you. This has been such an amazing moment. And so I have one last question, and I want this question to be very personalized. I want it to come from what you think, as a person, and really just give me your thoughts. And this is just one last question. What is one thing you want policymakers, fund managers, or founders to take away from this conversation today? Finn, let's start with you, please.
Okay. So I'll say for policymakers, just de-risk the journey, and private capital will do the rest of the work. Just de-risk the journey, for the entrepreneur. I'll say for the founders, um, because again, you understand the context of your business model. You understand that not all kinds of capital will work for the way your industry or your business model. It makes sense to be more vocal around the kind of capital that you need. Encourage capital providers to be more innovative as to the kind of models that is brought to the market, right? So if you're a founder, you're talking about how maybe getting some guarantee, just some support, just a different form of capital that is not the regular VC or PE or bank loan. Encourage and push us, the capital providers, to think out of the box, with regards to
Thank
capital
you so much.
markets.
Okay.
I
All
think that's
right. And Ela, I would like to hear one thing you would like to say to policymakers, fund managers, or founders, and what one thing you would like them to take away from this conversation today.
So for policymakers, it's about the long term. And it may not be something that you are going to see in your 2 or 4 or 6 or 8 year time at the helm, but it is setting the stage for future, and it will impact the country in 20 years. You need to accept that. For fund managers, think about your pipeline. Yes, it's important to invest into those who you know can return your capital, but it's also important to invest into the new emerging managers. Otherwise, you won't have somebody to invest in the next 10 years. And to the entrepreneur, I say, you're not in this alone. And in fact, you cannot do this alone. So find your network, find those who can support you, find those who are aligned with you and your vision and your thinking. And what you do is really hard. And so I think that if you continue that journey with the right people, everybody gets to win.
Thank you so much. You know, when she said that you are not in this alone, it's like even if you think that you are in this alone, and then she went ahead and said, and you can't even do this alone. So if you're even thinking that you can do this alone, she just goes, and you can't even do it alone. So like there is no room for you being alone in this journey. Thank you so much. That was really profound. Thank you so much. And to our very distinguished Mr. Philip, what is one thing you like, you know, policymakers, fund managers, and founders to take away from this conversation today?
Okay, yeah, thank you, Mimi. Looking at okay, I look at the ecosystem to be kind of a web of how this will work. Yeah, and just from and I'll start from the bottom, just going up, just for even beginning with our startups, because you see the problem that we see startups with, why sometimes I feel they fail, is the lonely bit of them, whereby I say you a startup working on a particular product, then there's another person who is working on logistics. Instead of partnering at that particular bit, so that you see the end-to-end bit of the product, you'll find most of us will want to work alone. So that I want to make this alone, rather than coming, how then do we partnerships? Then how do we help startups appreciate that partnerships help grow, than that partnership do not end up eating into your profits? Because fine, the margins could be small, but in the long run, this will be a sustainable way to look at it. Looking at fund managers, and there's something that I've also seen regionally, that each fund manager would want, fund managers want pipeline, but at that same particular time, most fund managers will not want and not much taking interest in working with institutions that produce that pipeline. They will want to do call for applications always. A fund manager, much of this just, I think we've gotten into this series of calls for applications. So in the essence, also we do not then we end up having repeat startups coming, or repeat organizations coming going for this, and we do not then able to have a way that how then do we reach everyone, and then how do we get quality pipeline, because we have to invest in it. For policy, I believe the best way to do this is, how do you able to listen to each and every facet of the ecosystem, so that we make a policy. I think there's an item that we come to get lately, whereby startups start fall. Then when they fall donor money, or they fall with this VC money. Then the next morning you wake up, the particular startup is have launched another startup, and I'm really so sad about it, in terms of how do we make policies that we then limit kind of uh, tactics than that will taint the market. Because if today you're given a fund, then you file for bankruptcy, then tomorrow we are seeing you launching another startup. For me, it doesn't. I don't know how that becomes entrepreneurial, but sometimes I see that's become like thieving. Thank you.
Thank you so much. Thank you so much. This has been such an insightful conversation, and I have learned a lot, even as a moderator on this session. Thank you so much for sharing your thoughts. Again, as I said, your insights are very profound and really this if this was a book, I think I recommend it to any young entrepreneur or anybody building a startup. Thank you so much. And your conversations and your insight really just reflect the theme of this year's TEDx event, which is titled Rewriting the Rules, especially on how government can shift from gatekeepers to enablers. So this conversation is really just a propeller of what we are working on with the TEDx this year, and that is rewriting the rules. Because with your conversations and the insights you all have shared, it is very clear that the rules are being rewritten by people who are shifting perspective and seeing new ways to assess fund and really do the work. Thank you so much, everyone. Thank you, Fee, Mr. Philip, and Ila. Thank you so much for the conversation today. My name is Mimi Okana, and I have enjoyed every bit of this conversation. Thank you so much for speaking to us today. And yes, we've come to the end of this conversation, and it's been such an amazing moment. Thank you so much, and good luck in your future endeavors. Thank you, and bye-bye.
Thank you.
Thank
Bye.
you.
Bye bye. Thank you.
Bye.